Welcome to the Deep Dive. We cut through the noise, boiling down research into the insights you need.
And today, we're tackling a real puzzle with Marathon Digital.
Exactly. Is ARA building something solid in digital infrastructure? Or is it all just, well, a house of cards? Totally reliant on Bitcoin's wild price swings and constantly issuing new stock.
We've dug into the sources, and we'll lay out what they suggest about where ARA really stands.
And a quick note for everyone following ARA, stay tuned. We plan to cover their earnings almost immediately after they're released. Things move fast with this one.
They really do. Understanding the fundamentals is key.
Okay, so our mission today, unpack ARA Holdings, Inc., ticker ARA on the NASDAQ. We're working off research analyzed as of July 29th, 2025, with a closing price of $17.16 the day before July 28th.
We're going to cover the business model, management moves, the financials, market vibes, and the big risks. Give you the full picture.
We've split this into two main parts to make it clear. Part one, the business itself, the leadership decisions, and the numbers, the financials.
Then in part two, we'll shift to market sentiment, who owns the stock, the key risks, and then try to pull it all together.
All right, let's get started. Chapter 1, business analysis. More than just a miner.
Okay, let's jump right into that core paradox we mentioned. Is MRA building this resilient digital empire, or is it potentially fragile like a house of cards?
What did the sources say?
Well, they're clear MRA is a giant, a real titan in Bitcoin mining, but its business model is pretty unconventional compared to traditional value companies. It really amplifies both the good and the bad.
So fundamentally, MRA's main gig is mining Bitcoin, right? Using tons of specialized computers to solve these complex math problems.
Exactly. And when they solve one, they validate a block of Bitcoin transactions, their reward. Newly minted Bitcoin, the block rewards, plus transaction fees. That's their revenue, basically.
But here's the twist, the HODL strategy. Explain that.
Right. HODL, it's a crypto term, means holding on for dear life, essentially.
Yeah.
Unlike a typical mining company that sells, say, gold or copper right away for cash, Marathon holds on to a lot of the Bitcoin they mine. It's a strategic reserve asset for them.
Okay, but holding it means they don't get cash from their main activity. So how do they pay the bills? The electricity, the hardware?
That's the crux of it. They have to raise external capital constantly, issuing new stock, taking on debt. It means their financial health and their stock price are incredibly tied to Bitcoin's price swings.
Doubly exposed, really. If Bitcoin drops, future revenue projections fall, and the value of their massive Bitcoin holdings shrinks.
Precisely. It turns MRA into something like a leveraged bet on Bitcoin itself. High potential rewards, but also amplified risks.
And this seems to be pushing them to pivot strategically. They're now calling themselves a digital energy and infrastructure company.
Yeah, that rebranding signals a move to use their huge data centers and energy contracts for other things like high-performance computing, HPC, or AI data centers.
So beyond just the Bitcoin they mine, what are these other products or services?
The big one is definitely offering that AI and HPC data center capacity. And it's not just, oh, here's another market. It feels like a direct response to the Bitcoin halving in 2024.
Right. The halving cut the block rewards from 6.25 Bitcoin down to 3.125.
Effectively doubling the energy cost to mine one Bitcoin overnight. Their CEO, Fred Thiel, even put a number on it, said their cost post-halving is around $46,000 per Bitcoin.
Wow. Okay, so this pivot to AI HPC is almost a strategic necessity then, to find other, maybe higher margin ways to use their assets.
Seems that way. They're also using their own tech, like special immersion cooling systems and custom firmware for the miners, to try and boost efficiency.
What about their scale? How big are they in the market?
Oh, they're a titan. Consistently one of the biggest publicly traded Bitcoin miners globally. As of late June 2025, their energized hash rate, that's computing power, was about 57.4 exahashes per second.
And they're aiming for 75 EHs by the end of 25.
Right. And because of that HODL strategy, they hold a ton of Bitcoin. Around 50,000 BTC as of late July 25. Only MicroStrategy holds more among public companies.
That scale must give them advantages.
Right.
Buying hardware, locking in energy deals.
Absolutely huge advantages there. Now, comparing them to peers like Riot Platforms or CleanSpark, the sources really highlight a tough reality across the whole sector.
Which is?
Deeply negative net profit margins, pretty much across the board. It's a difficult business model right now.
Okay, let's widen the lens to the industry. What's happening in Bitcoin mining in 2025?
It's definitely at a crossroads. The main thing driving growth is still Bitcoin's price, especially with institutional interest from things like the spot Bitcoin ETFs,
And the market size.
estimated around $2.44 billion globally for crypto mining this year, projected to maybe hit $4.4 billion by 2032. But the real focus post-halving is hardcore operational efficiency and that pivot to AI/HPC.
When competition.
Fierce. And consolidating. You've got Riot, CleanSpark, Hut 8, Core Scientific, all battling for the cheapest power and the most efficient machines. It's super capital intensive, so bigger players have an edge.
Hence the rebranding to digital infrastructure providers. Makes sense. What about regulations?
Some good news there, actually. The U.S. SEC clarified back in March 25 that standard proof of work mining isn't a security offering. That removed some uncertainty.
But state level is messy.
Yeah, it's fragmented. Some states like Texas are friendly, others are worried about energy use. But the immediate headache is the new U.S. tariffs.
Ah, the 2025 tariffs. Tell us about those.
They slapped tariffs of 24% to 36% on ASICs, the specialized mining computers coming from China and Asia. That directly hikes up hardware costs for U.S. miners.
So makes expansion more expensive.
Significantly. It could really squeeze smaller miners, maybe even accelerate consolidation, which ironically might benefit a large player like MRA in the long run. Barriers to entry are already high capital, expertise, locking down cheap power. This just adds another one.
So where does MRA get its competitive edge? What's its moat?
Well, brand recognition is strong in crypto circles, but the big one is really economies of scale. Their size lets them negotiate better deals for energy and hardware. Plus, they have unique assets like that massive Bitcoin stash and their own tech for efficiency.
But from a value investor's viewpoint, is that moat durable?
That's the key question. The sources suggest it's fragile, cyclical. It depends heavily on the Bitcoin price. A strong Bitcoin price means a strong stock price, which means easier access to capital to fund expansion. That's when their moat is deepest.
But when Bitcoin is low,
Their access to capital tightens, their main asset shrinks in value, the moat gets shallow fast. It's not the all-weather advantage traditional value investors look for.
Chapter 2, Management Evaluation, Stewards of Capital or Architects of Dilution.
Okay, let's look at the leadership. On paper, they look experienced. CEO Fred Thiel has a long background in tech, AI, semiconductors. He's overseen huge market cap growth at MRA.
And the CFO, Salman Khan, General Counsel Zabi Noaid, experienced team.
Right. But leadership isn't just resumes, it's also navigating challenges. And MRA faced a real test with that Granbury, Texas facility issue.
The noise and health complaints reported by Time magazine back in July 2024.
Exactly. How management handles those kinds of operational and community crises is a big indicator of their stewardship.
Now, alignment with shareholders. This seems to be a sticking point in the research.
It's a major red flag, honestly. There's a stark difference between the public talk and private actions regarding insider stock sales.
What are the numbers?
Over the last year, insiders made 54 sales versus only 11 buys. And in the most recent 3 months, 17 sales and 0 open market purchases.
0 buys, even with the stock price where it is.
0 open market buys from key execs like Thiel and the CFO. It strongly suggests they might see their stock compensation more like immediate cash salary and perhaps feel the stock is, let's say, fully valued. That doesn't exactly scream owner-oriented management.
Yeah, while people sell stock for many reasons, the complete lack of buying by the leadership team is noticeable. What about capital allocation? How are they using money?
Strategy is simple: growth, aggressive expansion, reinvest everything, and raise a lot more capital.
Like the mining site acquisitions in late 2023.
For about $178 million, yeah.
Yeah.
And then the huge one, raising $950 million in July 2025 through convertible senior notes.
Wow, nearly $1 billion. What's that for?
Officially, more growth. Buying more Bitcoin, funding acquisitions, expanding assets, managing debt. They're even putting some Bitcoin to work, like investing $20 million in 2,000 BTC into a firm called 2 Prime to earn yield.
But no dividends. No buybacks.
None. Growth is funded almost entirely by issuing new shares and convertible debt, which means...
Dilution. Existing shareholders own a smaller piece of the pie over time.
Exactly. And when you look at the ultimate measure, return on invested capital, ROIC, it's deeply concerning.
How bad?
Negative. Sources point to figures like 9.56% down to 9.5%. That means right now the company's essentially destroying value with the capital it's investing. A huge contrast to a high ROIC businesses investors usually prize.
Chapter 3. Financial analysis. A picture of growth at any cost.
Okay, the financials. As of late July 25, MARA's market cap was around $6 billion. That reflects a lot of market optimism.
And that optimism seems tied to their revenue growth.
No, absolutely. That explosive top-line growth is the core of the bull case. Revenue went from just $4.4 million in 2020 to over $656 million in 2024. And the trailing 12 months ending March 25 hit $705 million. Huge numbers.
But profitability.
Yeah. Below that revenue line, it's, well, a deeply troubled picture. MARA is profoundly unprofitable on an operating basis.
Give us the margins.
Trailing 12 months figures, operating margin, negative 105.64%. Net income margin, negative 46.68%.
Negative 105% operating margin.
Yes, and Q1 2025 was even worse. Net profit margin of negative 249%. It clearly shows costs are just running way ahead of revenue, cash burn.
And losses usually mean burning cash.
Got it. Unprofitability means severe and worsening cash burn. Free cash flow went from negative $25 million in 2020 to negative $924 million in 2024.
Nearly $1 billion burned in 1 year.
Yes. And in Q1 2025 alone, they burned another $407 million. The business model, as it stands, just consumes vastly more cash than it generates.
So consistent earnings are not really a thing here.
Not at all. Almost entirely negative earnings per share over the past decade. Now, they did report positive net income in 23 and 24.
But that wasn't from operations.
No, that was mostly non-cash accounting gains from marking up the value of their Bitcoin holdings on paper. Q1 25 brought a return to reality with a big operational loss per share, about $1.58.
What about the balance sheet? Does it look stable?
It shows signs of strain. Debt to equity was up to nearly 0.7 as of March 25, which is pretty high leverage and has increased significantly. And the current ratio was 0.79.
Below 1.0. That usually flags liquidity challenges, right?
Yeah.
Short-term debts exceeding short-term assets.
That's the classic indicator. And just to reiterate, no dividends paid, ever.
Okay, so how do you even value a company like this?
Yeah.
Traditional PE's out due to negative earnings.
Right, that's a sector-wide issue, not just MAR. Price to sales is about 8.6x. That's lower than some peers, but way higher than, say, the broader software industry.
And discounted cash flow, DCF.
Trying to do a DCF here is, well, the sources call it an exercise in speculation. With deeply negative free cash flow, any projection depends entirely on guesswork about future Bitcoin prices and hash rate growth.
You'd need a massive discount rate too, I assume?
Oh, yeah. Probably 15%, maybe even 20% to account for the huge risk and volatility, the bottom line. The current stock price around $17 only makes sense if you assume extremely bullish long-term scenarios for Bitcoin.
Part 2. Market, Ownership, Risk, and Conclusion. Chapter 4. Market Sentiment. Wall Street's Bet on the Future.
Okay, market sentiment. This is where things get interesting because there's this huge disconnect between MRA's actual financials and how Wall Street seems to view it.
What's the analyst consensus?
It's a moderate buy. You've got 11, 13 analysts covering it. Average price target somewhere between $21 and $22. JP Morgan even upgraded it recently.
But moderate buy doesn't sound like universal conviction.
Exactly. And you see that lack of conviction in the range of price targets. It's incredibly wide, from as low as $9.50 all the way up to $34.
Wow, that's a huge spread. What does that tell you?
It screams uncertainty. It shows analysts aren't really valuing MARA on current profits or cash flow because there aren't any. They're valuing it as a leveraged proxy for Bitcoin's future price and the potential of those unproven AI services.
So the stock price is more about narrative than numbers.
Highly sensitive to narrative. Like when they announced that $950 million convertible note offering, the stock tanked 11% on dilution fears. But then, positive interviews with the CEO can give it a short-term pop.
What other market indicators stand out?
Well, it's a classic battleground stock. Strong opinions on both sides, bulls and bears. You really see this in the short interest.
How high is it?
Exceptionally high. Around 25.9% of the public float is shorted. That means a lot of sophisticated money is betting the price will fall.
But that also creates short squeeze potential.
Definitely. If good news hits, those shorts might rush to cover, pushing the price up sharply. Technically, the picture is sort of modestly positive right now, trading just above its 50-day and 200-day moving averages. Some analysts see that as a bullish short-term signal.
Chapter 5. Ownership Structure. Who really owns MRI?
All right, ownership. Institutional ownership is pretty high, somewhere between 58% and 61%. Big names like BlackRock, Vanguard, State Street are top holders.
But how much of that is active versus passive?
That's the key question. A significant chunk is likely passive index funds and ETFs that have to own MRI because it's in their benchmark index. They aren't necessarily making an active bet on the company's success.
And insider ownership, we touched on this.
It's extremely low, just 0.80%. And like we said, the recent history is almost all selling, no open market buying from key execs. It suggests insiders are reducing their personal exposure.
Is ownership concentrated?
Not really. The top 25 shareholders own less than half the company. It's quite diffuse, lots of retail investors, smaller institutions. That can contribute to the high volatility and maybe makes management less accountable than if there were a few large active owners.
Chapter 6. Risk Assessment. A minefield of volatility.
Okay, let's break down the risks using a SWOT analysis. Strengths, weaknesses, opportunities, threats.
Strengths first.
Market leadership, that huge scale, the big Bitcoin treasury, their tech and vertical integration efforts and proven ability to raise capital, those are significant.
Weaknesses?
Lack of profitability, negative free cash flow, big ones. Shareholder dilution is constant, high operating costs, especially post-halving. And reputational risk, like that Granbury facility issue.
Opportunities.
Bitcoin price going up is the #1 opportunity, by far. The pivot to AI/HPC opens up a potentially massive new market. Favorable regulations could help, and they might be able to scoop up smaller, struggling competitors due to industry consolidation.
And the threats.
Bitcoin price collapsing, that's existential for them. Rising energy costs are a constant pressure. Geopolitical risks, especially those 2025 U.S. tariffs on ASICs. Intense competition, both from other miners and established AI/HPC players. And the Bitcoin network difficulty always increasing, demanding more power.
How do broader economic factors play in, like interest rates?
Higher rates are bad news. Increases their debt costs, makes investors less willing to bet on speculative stocks like MRA. Lower rates are generally positive, cheaper borrowing, more risk-on appetite for assets like Bitcoin and related stocks.
What about inflation?
That's a tricky one, kind of a double-edged sword. It increases their costs, energy, labor. But if people view Bitcoin as an inflation hedge,
Then a higher inflation environment could boost Bitcoin's price, potentially helping Maria's revenue and asset value.
exactly, it could potentially offset some of the increased costs, but it's complex.
Let's nail down those tariffs again, the 2025 U.S. ones.
Right, this is probably the most immediate direct threat. Tariffs of 24% to 36% on mining hardware, ASICs, and potentially GPUs from China Mario.
How much does that add to costs?
An example given is a 25% tariff, adding over $1,250 to the cost of a single new mining machine. That directly squeezes margins, makes expansion harder and more expensive.
The impact on the U.S. mining scene.
Could slow down the growth of U.S.-based mining power, potentially forcing more consolidation, leaving just a few big players standing. There are also broader geopolitical risks if countries use crypto to evade sanctions. That could trigger much stricter global regulations.
Chapter 7. Conclusion.
Okay, let's try to synthesize all this. The bull case for MARA.
It rests on being a leader, right? Unmatched scale in North American Bitcoin mining.
Exactly. It gives investors a way to get highly leveraged exposure to Bitcoin's price through a liquid stock. If Bitcoin booms, MAR stock could potentially outperform Bitcoin itself.
Plus, they have that huge Bitcoin treasury, 50,000 BTC, for flexibility.
And that strategic pivot into AI and HPC, it's not just diversification, it's tapping into a massive growing market using their existing infrastructure know-how. Wall Street's moderate buy and high institutional ownership back this narrative.
Okay, now the bear case, from a traditional value perspective.
It looks pretty bleak, frankly. The business seems fundamentally broken, can't generate profits, burns cash like crazy. The whole model hangs by a thread on Bitcoin's volatile price.
And growth comes at the cost of dilution.
Relentless dilution, plus that major disconnect between management's talk and their actions, the heavy insider selling, no buying, it raises serious questions about alignment.
And they face huge headwinds, the tariffs, post-halving cost pressures, fierce competition.
Absolutely. So valuation-wise, as we said, traditional DCF is almost meaningless here. The market value seems totally detached from current economic reality.
Any justification for the $17 share price requires really aggressive assumptions about Bitcoin's future.
Extremely aggressive assumptions about Bitcoin and their ability to successfully pull off this very difficult, unproven pivot into AI infrastructure. The stock is basically trading like a call option on a highly speculative future.
So wrapping it up, the concluding outlook. Where does MRA stand?
That $17.16 price lives in this weird space between two realities. It's way above what the current fundamentals would justify, but it's closer to that average analyst target around $22, which is based entirely on that bullish future narrative.
So investing in MRA today isn't like buying a stable, cash-generating business.
Not in the traditional sense, no.
Yeah.
It's a high risk, potentially high reward bet. You're betting heavily that Bitcoin's price will soar and that management can execute this complex strategic shift against some pretty significant headwinds. It's speculative.
A really interesting case study. So for you, the listener, what's the biggest takeaway from MRA's story? Does it make you rethink what a tech company or even a value investment means today, especially in these fast-moving digital sectors?
Yeah, think about that balance between speculative opportunity and fundamental financial health. Where do you draw the line?
If you found this deep dive valuable, please do like and subscribe to the Stock Analytics AI YouTube channel. For just $4.99 a month, members get priority on deep dives for specific tickers.
And we've got big plans over the next few months. We're aiming to cover all of the S&P 500 stocks. Members get exclusive priority access to those.
Want a one-off deep dive on a stock we haven't covered? Just drop us a super thanks on YouTube.
And the usual reminder, this analysis was generated by an AI system. It's for educational purposes only.
Definitely not financial advice. Always do your own research or talk to a qualified financial advisor before making any investment decisions. Thanks for joining us for another deep dive.